So you made over $11 million last year, and did you pay $0 in taxes?
I paid $0.
How is that legal?
Government is essentially paying me to invest in rental real estate. That is my tax incentive. This is what people need to understand. Paying taxes is not patriotic. Stop paying the lazy tax. I don't want my dollar to just give me $1 back in a write-off. I want my dollar to give me $2 back in a write-off.
One of the biggest things I see with people, they don't even know how to ask for something.
This is the most dangerous place to be in, Kassidy, is where you think you can see things. I can see about 5 miles down the road based off of my own understanding. But then you have people that have done more than you that can easily see 25 miles down the road. I want to be a small fish in a big pond, and I want to constantly be looking to grow.
What's the biggest tax hack that every couple can do? What would it take to qualify your children to be on your business payroll? What is good debt? What is bad debt? An average person making $100,000 a year, can they pay $0 in taxes?
They may not want to hear the things that I'm going to tell them in order to pay $0 in taxes. First, you have to separate yourself. My biggest statement is coming right out the bat and saying paying taxes is not patriotic. And anybody who believes that paying taxes is patriotic is literally uneducated. And the system is literally working for perfectly fine for people that are educated and people that are uneducated.
So why is paying taxes not patriotic?
It's not patriotic because taxes did not run our country. We didn't have taxes until about 117 years ago. Do the math on that. I mean, your great-grandmother got to experience what it was like possibly to not have taxes. That being said, our United States government ran off what's called excise taxes. We collected taxes on tobacco and alcohol, and that's how the country ran. And we operated very well until we had a civil war. And that's when we started to say, let's sign a law that allows for us to take money out of people's paychecks in order to satisfy the war. But then that became permanent law. And over the years, it's just gotten worse and worse and worse. And when you throw in quantitative easing and the printing of money, we are left to front the bill for the government. So no, it's not patriotic to pay taxes. It's more patriotic to use the government system to avoid paying taxes because they put us here.
And so you made over $11 million last year. And did you pay $0 in taxes?
I paid $92,000 in federal taxes. I paid $0 in California state taxes.
So how is that legal? And how does an average person be able to access the same amount of tax savings as you?
What I do is I focus a lot of my time in looking for tax incentives. The tax incentives that operate within the tax code require you to spend money. So when people think that I don't pay any taxes, what they don't realize is I'm spending so much money in order to avoid taxes because I'm making investments that the government wants me to make, which simultaneously gives me massive amounts of paper loss, massive amounts of depreciation or tax credits that puts me into the lowest of tax brackets. I mean, my tax bracket was essentially 1% last year, which is pretty awesome. But not too many people can say that because not too many people are making as many maneuvers as I'm making in 1 year.
Can the average person make the same amount of maneuvers? It's like if an average person making $100,000 a year, can they pay $0 in taxes?
Yeah, they could pay $0 in taxes, but they may not want to hear the things that I'm going to tell them in order to pay $0 in taxes. If you're only making $100,000 a year, you're probably paying maybe $15,000, $25,000 on the high end in total taxes. So wiping out $100,000 is as simple as giving money away to charity, putting a good substantial amount of money into a 401k, and probably investing in a traditional IRA. Just with those simple 3 maneuvers, you could probably wipe out a $15,000 to $25,000 tax bill on $100K of income. But is that the smartest thing for somebody doing $100K a year to spend their money on giving some of it, in charity? Of course, charity is important. Locking up so much money into a retirement account until they're 59 and a half. I don't think those are the right things. I would rather somebody who's making $100,000 to $200,000 a year just focus on a high income skill and getting that themselves into a place where they're making $300,000, $400,000, $500,000 a year or more, where they really have a tax problem.
Let's say I decide to go be an entrepreneur, right? I'm an employee, but I'm going to start a side hustle. What's like my first step to structuring and avoiding or legally avoiding paying taxes?
Yes.
And let's say I plan on making $1 million a year. I'm at 50K right now, but I plan on making $1 million a year. What is my path as a new entrepreneur?
First, you have to separate yourself from the business. Now that you're a new entrepreneur, know that you operate with a social security number, but your business operates with an EIN number the moment you decide to set up an LLC. So you're going to take that EIN number, go to your bank, open up a business bank account, and make sure that you start doing bookkeeping and accounting for anything that you spend your money on. But before you start spending money on things, you first need to know, what can I write off? The government doesn't give you a list of all these different things that you can write off, but they'll tell you under Code Section 162A, if the expense is ordinary to your business, necessary to your business, and reasonable to your business in the pursuit of income, under IRS regulations, it could be a business deduction. So a lot of people reach for their cell phone or cars, and they aren't able to write these things off if they're just employees. But when you're a business owner, you need a cell phone, you might need a car, you might need a website and a laptop, and you can convert everyday personal expenses that the natural human being has into business expenses because you decided to start a side hustle. So that is just basic rules number one. Let's go ahead and open up the bank account and make sure that we're treating that business separate than ourselves. And then let's make sure that we know what are the expenses that would be considered personal that I now can allocate over to business that are justifiably needed to run a business.
Yeah, it was one of the first things I did when I started doing like some consulting work, service work. I started an LLC, started an S Corp, elected S Corp, and then ran essentially a lot of my normal expenses that I now use for business under that S Corp, and lost money for a little bit because my expenses outweighed my income in the beginning.
Yeah.
And I still have that LLC today. And I use that to run all of my service income, all of my like stuff that just comes in essentially to run it through there. And I still have a lot of those same expenses running through there. And that has helped me actually get qualified for real estate. It's helped me a lot having a separate entity that is essentially my personal brand now. So is that something that you recommend people do, is like, if you were going to start a personal brand or a side hustle, like, is that the first step, starting an LLC or like S Corp, or when do they need to start thinking about that?
I think first, proof of concept, right? I think we always sometimes get excited. So we'll run off to the first website that we see to go set up an LLC. And maybe setting up the LLC will give you that motivation to actually grow your business. But for many people, I can see that being a barrier for them actually getting started. They put all of these obstacles in the way. Well, I got to set up my LLC. Oh, I got to speak to a CPA. Oh, I got to get an attorney. I got to file a trademark. Bro, you got to make income. Go start running the business. Go prove a concept first. We could figure out the LLC certainly later. Yes, it's important to have the LLC to separate your liability, to make sure you're tracking things right. But it's equally as important to prove a concept that you can truly run a business and make business profit outside of your 9 to 5.
That's right. It's not just about writing things off. It's like, go make money.
Yeah, absolutely.
Go make money. Okay, so you didn't use just write-offs to pay zero taxes though,
No.
right? And so help the audience understand the difference between like a write-off and using different sections of the code where you're getting an outsized benefit.
Yes.
Yeah. So the depreciation, cost segregation, right? Like, how can you find ways to get an outsized benefit rather than just like buying stuff just to write it off?
So I take leveraged investments in order to create massive write-offs. This is what people need to understand. I don't want my dollar to just give me $1 back in a write-off. I want my dollar to give me $2 back in a write-off. So how can I do that? I'm going to take out leverage. Most business owners, when they want to reduce their tax bill, well, they might just spend down the money inside of their business on stuff. I don't view spending your money on stuff as a tax strategy. We see business owners at the end of the year all the time just dumping money into ads. Sure, that could be profitable for you, but are you just spending money? Do you know if you're wasting money on those ads, right? That being said, what if I were to reinvest some of my business profits outside of my existing business into an investment like rental real estate? Well, the government says, Karlton, if you invest in rental real estate and you are the person that is running that business, you get tax write-offs. And the write-off that we get to receive in real estate is depreciation, which is the purchase price of the entire building. So if I put down 20% and take out an 80% loan, I'm able to write off the entire purchase price of that building, even though I leveraged 80% to get that asset. On $1 million property, Kassidy, I'm looking at somewhere between $250,000 and a $350,000 deduction with a rental property that has good building value. If I come in at $200,000 down and I'm getting $300,000 back in a year one write-off, the government is essentially paying me to invest in rental real estate. That is my tax incentive. Now it's just a matter of making sure, can I actually use that $300,000 that I got from that rental property to offset my other active W-2 or my other active self-employed income that I have? And that's the secret sauce that we talk about.
So Karlton just gave everybody essentially the key that unlocks true wealth, I believe, in this country, right? Obviously, building a business and going and growing your income. And then the second part of that is, how do you reduce your taxes down to zero? And what Karlton just described is exactly how you do that. So let's break it down just a little bit more, because you said leverage assets to get, you put $1 in, you get $2 or $5 essentially out on your leveraged investment. So what is depreciation and why does it matter to everybody? I don't want to get too technical for everybody, but this is a really, really important topic for the average everyday American to understand the difference between a regular write-off and depreciation and a paper loss on your tax return.
Yes. So depreciation by IRS definition is the recovery cost over time for a set asset. All different types of asset has what's called useful life to the IRS. If you buy a residential property, the IRS says that the wear and tear of that property is going to take 27 and a half years for you to fully recover the entire cost of that building. If it's a commercial building, the wear and tear and the wear down is only going to take about 39 years, which is a little bit longer than residential. So depreciation is the ability for you to recover based on the wear and tear of a property. With laptops, for example, the IRS says, well, after 5 years, a laptop has been worn down and you should be replacing a laptop every 5 years. So for a business owner who buys a laptop inside of their business without using any tax strategy, would have to depreciate a piece of equipment like a laptop over the course of 5 years. But the government creates incentives for business owners, such as Code Section 179, which allows for you to write off a piece of qualifying equipment that has useful life of less than 20 years as a year one write-off. So that Apple laptop, we can take the full purchase price of it, whether or not you financed it. Now let's bring this over into rental real estate here, for example. If we have a property that depreciates over the course of 27 and a half years, well, how do we get so much of this write-off up front? Well, we have to break the property down. And this is called a cost segregation study. Your property has what's called tangible property. You have structural components and non-structural components. Structural components are the load-bearing walls, the wood, the concrete, and the steel that actually makes up the property. The non-structural components are considered the appliances, the flooring, and the shrubbery. All non-structural components is what the IRS will allow for you to write off in as quickly as 1 year, because anything that's considered non-structural has a useful life of either 5 years or 15 years. So when a tax professional like me gets hired to do a strategy like the cost segregation study, we're getting the cost of all this non-structural components, like all of the appliances and the fencing, and we're segregating it from all the structural components, the load-bearing walls, the elevators, the foundation of the property, and we're going to write all of it off in year one. That can be anywhere from 20% of the building's value upwards sometimes to 35% of the building's value. And that is what we call a paper loss deduction from depreciation.
Yes. And so the paper loss essentially is saying, well, I put a down payment on this property, right? Yeah. I put 20% down on this investment property. It's $1 million property. So I put 200 grand down, but I get to write off essentially the entire $1 million. Now, whether that's in year one or year two or year three, and what that ends up meaning is I spent less than I actually get to write off on my tax returns.
Correct.
Right. And that's what the leveraged portion means, right?
Yes.
So if you go buy the laptop, usually you're not financing a laptop.
Correct.
Right? You're not financing a laptop, but usually, and so you get to spend less and take the full deduction.
Yes.
Okay. So now, and the cost segregation allows you to do that, right? That was probably the most in-depth, detailed, clear explanation of a cost segregation study I've ever had. And so now, what does that mean for a regular W-2 employee? Yes. The engineer, the doctor, the lawyer, the mechanic, the plumber, the everyday American is like, okay, what does that all mean to me?
Okay, what it means to you is you now have something that's viewed as not only an investment in the eyes of the IRS, because real estate is a very hard, true asset, but you also have a business in the eyes of the IRS. And if you're able to show the IRS that you're running an active business in real estate, meaning you put in a certain amount of hours of material participation, management over your property's day-to-day operations, you can use that depreciation that was given to you with the cost segregation study to offset W-2 income. So if I'm a W-2 taxpayer, how do I get to qualify to use real estate then to offset my W-2 income? The IRS created these rules, and the rules are passive activity loss rules. If you're somebody that can show the government that you're spending 750 hours in the entire year managing your investment property, and you're able to show the government you're spending more time in real estate than your W-2 or your 1099 job, which by the way is very hard for most taxpayers to do, now you're able to use the rental losses as active depreciation losses against active forms of income. This is where I personally find it very hard for someone who's single. Because if you're a single physician, you're going to have to show the IRS you're spending more time in real estate than you being a doctor, you being a lawyer, you being a dentist. But what if you had a spouse? Maybe your spouse could possibly not be working or taking care of the kids. This is where we see a lot of real estate professionals thrive, is if they have a spouse that can qualify as a real estate professional, unless the spouse was already in real estate as a real estate agent or a broker. Now, I got pretty bored in 2020, like many people did, and I went back to the tax code and I started to question, how did the IRS view Airbnb and VRBOs? Because when you think about it, this whole tax code around passive activity loss rules and being able to use depreciation, it was written back in 1986 as a part of the Tax Reform Act. But Airbnb and VRBO didn't come out until 2011 and 2013. So I wanted to know, how does the IRS view an Airbnb business or a VRBO business? And there was nothing in the tax code that explicitly said Airbnb or VRBO. But what it did say was, if you run a transient business in the eyes of the IRS is a business that is being rented to customers on 7 days or less. So that was like a hotel or a motel-like business. You have an active business in the eyes of the IRS without having to spend 750 hours. You just need to spend 100 hours of material participation and make sure that you're managing that Airbnb or short-term rental more than any other person. Fast forward to 2020, as I'm reading this, I'm thinking, well, this would be great to share with all these W-2 taxpayers that couldn't qualify as a real estate professional. So I'm going to go ahead and start my YouTube channel now and start sharing with people tax strategies, but I'm going to have a focus on real estate because I know that I can help not only self-employed individuals, but also the W-2 that's working full-time to invest in real estate as a means to offset their taxes.
That's right. All right. So you mentioned something there, real estate professional status.
Yes.
Because I want to connect all the dots here for everybody, because this is what I'm getting to again, is like, this is how the everyday American, the average American, like creates generational wealth in their life without having to go become an entrepreneur, right? Not everybody wants to be an entrepreneur. Not everybody wants to be a YouTuber or a content creator or whatever, but they know they're supposed to buy real estate, but they have the regular job. And so they don't get it. They don't usually get it.
Yes.
And they talk to a CPA, not Karlton Dennis, that says, nope, you're not allowed to offset your active income. Nope, you can't buy a property. Nope, the IRS does not allow it, right?
Yes.
But what you just said is the short-term rental loophole, right?
Yes.
Is if you go buy an Airbnb and you're an engineer, a doctor, or a lawyer, essentially you can pay $0 in taxes.
Yep.
Yeah.
That's 100% correct.
Simple as that.
Under code section 469, cap C7. You can go look it up in the code. Those are the passive activity loss rules. If you are an active participant over a short-term rental that's rented on a transient basis, meaning your customers are staying 7 days or less, and you spend 100 hours materially participating, you can perform cost segs, you can create paper losses, and you can never pay taxes if you don't want to, just like I do.
That's right. And that's for the everyday American.
Yes.
All right. So now this is what I tell people about real estate professional status. The greatest hack that every couple can do is to have one spouse be a real estate professional. What's the biggest tax hack that every couple can do?
What we're seeing is clients are qualifying their spouses as real estate professionals because when you do the math on it, most W-2 taxpayers that are making a combined household income of around $500,000, and let's just say it's pretty split, it almost makes more sense for one of the spouses to focus on just managing the real estate portfolio and allowing one of the spouses to go run up the score. The reason why this is important is because your earning potential is being capped by how much taxes that you're paying. So rather than focusing on being able to invest, you're just making a little bit more money every year and then paying a lot more taxes every single year. Whereas if you take your one person off the playing field, designate that one spouse to be the real estate professional, you're building wealth in real estate, allowing for someone else to pay down your mortgage while simultaneously giving yourself these real estate losses that you arbitraged from someone else paying down your debt. Now, when you go to file your return, your husband or you are receiving this huge refund back. And now you guys are in a place where you have this extra money that you can go and reinvest into another rental. This is what we're seeing a lot of our clients doing. I would say a majority of them are having their wives run the real estate portfolio because the wives tend to be more hands-on with the children. So they can balance being parents, which is the most important job, and also being a real estate professional for the family.
I think this is one of the most patriotic and family-oriented things that you can do. I think having one spouse, whether it's the husband, the husband, wife, like whoever it is, whoever is the highest income earner, the doctor, the lawyer, the engineer, whoever's making the most amount of money, they keep working their job,
yes.
Right? That is the highest leverage activity that they can do, right?
Yes.
Is go make the most amount of income, active income. And then the other spouse, especially if they have kids, they get to now quit their job. they don't have the 40, 60 hours, whatever they were working before for minimum wage or even 50, 60, even 100K a year. If you quit your job, you get to stay at home with the kids, you become a realtor, a broker, like a property manager, anything in the real estate business.
Yes.
And with one property, you can offset all of the taxes of the other individual.
Yeah, you have the ability to. And the beautiful part is you're a business owner too, right? You're not just a manager over the real estate, you're running a real estate management company. We can have the LLC that holds the investment property, but why not have an LLC that manages that LLC that's holding the investment property? So now the spouse gets paid for managing over the real estate, giving the spouse the ability to take deductions that the spouse would have never been able to take as well. It truly turns the family's lifestyle into a tax write-off. Now, when the family wants to go on a family vacation, they're not going on a family vacation. They're going to go view an investment property somewhere, sit down, learn more about real estate, and bring their kids with them, because that's how families should operate as they're building wealth and taking vacations.
Okay, family oriented. Let's talk about putting children on payroll.
Yes.
Well, when, how, why, is it a benefit? What would it take to qualify your children to be on your business payroll?
Yeah, so to qualify children to be on payroll, they have to be doing bona fide work. Most children that we see go on payroll are typically child models early on. And so if they're like 3, 4 years old, the most they're going to be able to do for a business is probably be a child model. And no, they're not going to make $15,000 a year. They're going to make something more reasonable to their age. But as your children start to grow up, they can play the janitor for your business or play the social media manager, social media marketer for your business, helping you post on Instagram, helping you post on Facebook, might even respond to some emails and pick up some trash inside of the family office. These are tasks, although they may seem small, actually aids the family. Why? Because you can shift income from your S corporation into a family management company, LLC, and you can pay your children from that family management company a bona fide salary, giving you, the business owner, the tax deduction without you having to pay payroll taxes for your kids, and possibly in some states not have to file a payroll tax return or file any tax return in that matter. But what the smart thing to do is to open up the Roth IRA, custodial Roth IRA for each one of those kids, and stuff $7,000 in. Now, with the money that neither you and I pay taxes on, we get to go ahead and designate some of that money to be tax-free for our kids growing for a lifetime, and leave the rest to be available for when we need to pay for their tuition.
Okay. Is there any limit to the amount of work or hours I can give my kids to go to go work?
I mean, it's got to be reasonable within, working guidelines applicable to the state. You have to follow all the state mandate laws that you would follow if you were hiring a regular employee.
Dang.
Yeah.
No, I'm just kidding. I'm sure you've read Rich Dad, Poor Dad.
Oh, absolutely.
Right?
Staple.
That's when I first learned asset liability, right?
Yes.
After I read that book, I was like, I'm never going to buy liability ever again, which is not really true, right? Like, you can't live that way.
That book simplified for me how people view money, how poor people view money, how middle class view money, and how rich people view money. Poor people view money as a means for them to just simply pay their bills. The middle class view money as a means for them to pay their bills on time and have good credit so they can buy things they can't afford, and liabilities. And the rich use money to make more money. It was very clearly outlined in that book. But most importantly, the underlying message is that if you do what the government wants you to do, you could literally pay 0% in income taxes to live off cash flow. That's also the underlying message that he was trying to give in that book. And by me putting out content is truly to try to help extend Robert Kiyosaki's legacy, but in my own way, knowing that I'm a tax professional and he's not.
Yeah, but he really hammered it home. Asset liability. And then it's an allegory of like the mentality of the poor versus the rich. And I grew up middle class, go to school, get a degree, like save, 401k. The mortgage was paid off early.
Yes.
Debt is bad. Debt is bad. But you see Kiyosaki all the time saying, I've got, I think he's got $1 billion in debt right now or something, right? So what is good debt? What is bad debt?
Yeah. Good debt is debt that makes you more money. Bad debt is debt that takes away from you being able to build. Bad debt is debt that comes in the form of large interest fees, such as credit card debt. And the reason why people are afraid to get into debt is because they've been told that debt can be bad. They've never been told that debt can be used as a tool to help you build more money. So you'll see business owners taking out lines of credit, business loans to continue to grow their business. Or better yet, you'll see people borrowing from their own properties, HELOCs, home equity line of credits, or cash out refinances to invest in more real estate. Why are they doing this? Because they want to give their dollars more than one job. And by being able to take out leverage, they can use tax-free income sometimes if they're taking out loans from themselves personally to be able to give their dollars more than one job. It's cool to be able to say, yeah, I don't have any debt, but it's also equally as awesome to be able to say, dude, I have a massive amount of debt and I strategically did this on purpose. Look at how much cash flow is coming in that I've been able to arbitrage off of the debt that I've been able to receive. So it is truly a game. Those that are trying to build wealth fast are going to look for the different avenues to build wealth fast. How can I partner with somebody, express an idea so I can go and build my money quicker versus just saying, oh, I don't want to take on any partners. I'd rather be debt free. This is a slower path. Could be guaranteed sometimes. It's just very slow path. And you're going to have to weather inflation and some hard times. This is a fast track towards building wealth. And I'm always on the fast track for sure, because time value of money tells me it's more important for me to make more money right now so I can spend it with my loved ones, knowing that I don't know where the tax code is going to be, where interest rates are going to be, or where a COVID 2028 is going to be. I'm focused on right now.
That's right. I just did an episode on ownership, and that ownership is patriotic, and ownership is control over your destiny, and ownership is control over your future. And if you wait to save up all cash for a house or whatever you're trying to buy, it's never going to happen, number one. And you're still under control of your job, your employer, or whatever is dictating your reality, right?
Yes.
So if you're too scared to go get debt on a property, you're never going to be able to take ownership for your own life.
Yep.
Right. And so how much is real estate a component of tax strategies for you and for your clients?
I would say real estate is like a big component for my clients. It's become less of a component for me because I've been able to start diversifying over time. I think it's important to go deep first before you go wide. So I went all in on real estate as my main strategy. And then now that I've amassed quite a bit of real estate and I have tons of debt, now I'm like, okay, I want to diversify a little bit. Now I'm starting to get into oil and gas wells. Why? Because I can get almost the same amount of depreciation that I'm getting from rental real estate by investing in an oil and gas well. But now I'm not taking on debt to invest in an oil and gas well, right? I don't have a mortgage loan to have to worry about paying back, even though I'm investing money into a depreciating asset. And then also I've been putting money into movie film projects underneath IRC 181. You can invest money into the production of a movie film and receive tax deductions for it. Some of these movie producers that are producing these movie films that qualify for these 181 tax credits for taxpayers, they will go ahead and seller finance the entire production cost of the movie to investors. This allows for investors to get a multiple on their investment, similar to how you're able to leverage an investment property for depreciation or a vehicle and claim so much of a write-off. So for every $1 that goes into a movie film, my investors are taking on $3 of recourse debt, but they're able to write off their investment. So they're $4 tax write-off off of that $1 invested.
So why do this movie write-off versus like a real estate write-off?
Because of the leverage, right? If I'm able to get a 4-to-1 on my money, if I put $100,000 into a movie film project, I might get a $400,000 deduction year one. That same $100,000 may only buy me a $500,000 property and result in only maybe $80,000 worth of depreciation, where I'm getting a $400,000 write-off. If you multiply that $400,000 times my 37% tax bracket, as opposed to that $80,000 deduction times my 37% tax bracket, I'm equally benefiting more by doing that movie film investment. The issue is I'm investing money into a movie film, more speculative. Is the movie going to do well? Is it not going to do well? It's not a hard asset like real estate where I can go touch it physically. It is an asset, but it's different, right? And so I'm super illiquid in this asset class. Has the ability to cash flow, has the ability to make money, but not every movie makes money. So I like to layer tax strategies. I have my tried and true, my real estate, my oil and gas, my solar, tried and true. But then I have some of these alternative investments as well that combine with what I'm doing that can really boost my tax savings for me.
Should people just be investing for the tax savings?
No, absolutely not. You can go broke investing for tax savings. I've seen it happen where people are focused so much on trying to pay nothing in taxes that they have zero income and they're illiquid. You have to balance liquidity and tax savings. And sometimes I'll tell you, it may not make sense for you to even focus on tax strategy because you're so illiquid at the time. So we have to really assess, are you going to have years in which you're going to make high income, years in which you might make lower income? Because that can dictate how we choose to buy assets. Maybe we buy assets in a year in which you have high income and we take some years off and we just pay the lower tax rates in years in which you have lower income versus trying to always get to zero. Where'd
you start learning this stuff, Karlton?
My mom taught me. I grew up here in Orange County, and my mother moved out of Compton, California, Los Angeles with my dad. And they told themselves they were never going to go backwards. And my mom became an entrepreneur. My dad worked for the city of LA. And my mom decided to start her own practice and hired her first associate. And that associate led to 4, 5, 6. She built an entire team. But by the time that I started understanding how my mom was making money, I was about ready to go off to college to try to become a football expert. So I wasn't really interested in taxes. It wasn't until I graduated college, didn't go to the NFL, started my own side hustle for personal training, got a letter in the mail from Uncle Sam that told me, hey, you owe us money. I looked at my bank account and I'm like, hold on a second. They say I owe them more than what's in there. Now I should call somebody. Who should I call? America's tax lady, my mother, Miss Karlton Dennis. And at the time, my mother's firm was maybe about 15 to 20 professionals deep. And I sold her on the idea of wanting to start a sales division. I was already working for a sales company. I was already getting sales background. I bought in a couple Grant Cardone books. So now I felt like I can go and sell in her company. And when I joined her company, I'll be honest with you, it was a rocky start. I didn't understand anything about taxes. I was super green, even though I lived in a tax house. But I got to hear from customers and what their issues were, how they felt like their CPAs were just giving them the same runaround, how they had to turn into Google Wikipedia to figure out how to mitigate their taxes. And my mother sold tax planning services, which is completely different than a normal CPA firm. Most CPA firms just focus on tax prep and bookkeeping, but she focused on tax strategy. That requires you to know how to communicate advanced techniques to people. So what I did was I put a black voice recorder in her office one day, and it recorded 8 hours of content. I had it sent over to rev.com. And the next day, I had an entire script of 8 hours of my mom communicating tax strategy. And I studied that. And that's how I became able to sell. It wasn't until I got, embarrassed on the phone one time with somebody that I decided, you know what? Just because I can sell doesn't mean I have the license. It doesn't mean I have the skill set to be able to actually help somebody. And that was when I decided to go and get my tax license.
Okay. So you put a recorder in your mom's office. Did she know that you were recording?
Oh, yeah, absolutely. I had to disclose that information to her. I honestly had no other choice. I was already working in her company for a month and I was on commission base. And when you make your own commission, or when you make your own job description before you join your mom's company and you say you want to make commission only, you better go make some commission. I went 4 weeks without making anything. So I had no other choice but to literally sit in her office and learn from her. But when I started sitting in her office, these conversations got long, they got dragged on. So I said, okay, I'm going to put a recorder in here so I can try to understand this stuff later. And that's when I got it sent to rev.com and was able to decipher that information and build my own script to start selling for her.
Did you ever go back to being a personal trainer?
I kept my personal training going up until I closed my first tax planning deal. I was selling personal training for $200 a month. And it was very hard to get clients because social media was super new. A lot of people weren't really on Instagram like that. You didn't have IG Reels yet. There was no TikTok yet when I graduated college. So it was super new. So what I ended up doing was I would study tax planning and then work on my side hustle in the afternoons and build out training programs. I only sold maybe 3 to 4 training programs a week, maybe only made about $1,000 a week. When I sold my first tax plan, it was $20,000. Instantly, within 30 minutes, I had a $2,000 commission check provided to me right then and there. I knew right then and there that if I could master how to sell $20,000 tax plans in a 30-minute window, I was going to run up the score. And that's exactly what I did. I ran up the score and honestly created another issue. Now my mom had another problem. Karlton has figured out this sales thing. I have to go figure out how to hire all these tax pros and figure out how to fulfill on all this work. And that's when her company started to grow. And that's when I realized I had a power in being able to help people with tax strategy too.
Did you know you were like becoming an entrepreneur or a business owner? Or were you just thinking, oh, I'm solving this problem. If I got this big tax bill, I gotta go pay it?
No, I just knew that I was always meant to have my own thing. And I think that's part of the reason why I went into personal training. Like I knew I was always meant to have my own thing, but I also viewed myself as someone that was going to study my way into becoming a doctor or a physician because I majored in kinesiology and minored in nutrition. And so a part of me was like, well, if this whole football thing doesn't work out, maybe I'll become a physical therapist or a personal trainer for NFL athletes. But when reality sets in and you need to have like 5 years of experience to do this or 10 years of experience to even apply for this job, I'm like, okay, well, let me just go get a job somewhere and then start a side hustle like many people do. And that side hustle showed me how hard entrepreneurship is, how difficult it is to grow something when you don't have someone mentoring you. And so me joining my mom's company was me able to see a business owner who had been a business owner for over 25 years, systems, process, operation, management meetings, a sales team, a marketing team, an HR department, how to communicate with staff, why you need to be punctual. It really showed me how to be a business owner. So when I started building up my own personal brand on social media, putting out tax content, and eventually started my YouTube channel, I kind of had a good footing on what to do next in order to build a business around the newfound income that I was starting to receive.
And so what do you say to people that maybe don't have a mom that's a 25-year entrepreneur?
Yeah.
Because do you credit, like, there's the Bill Gates effect. Bill Gates was like a block away from the world's largest supercomputer and he had access to it, right?
Yep.
Like, would we have had Microsoft without that? I don't know. Would we have Karlton Dennis without his mom? Or would there be a different version of you that's still an entrepreneur, still making 11 million a year, still, helping people with tax? Or what would it look like?
I don't know. I think for sure still an entrepreneur, probably not in taxes. If it wasn't for my mom, I definitely wouldn't have fallen back on taxes. It's so funny. My mom always told me, she always said, this tax business is going to be yours someday. You're going to go off and do something, Karlton, and it's going to be extraordinary, and you're going to find a way back to this company. And I never wanted to believe her because I never wanted to do taxes. I was like, dude, taxes is so boring. This is like something that people just have to do for the government. Like, is my mom a government worker? Is she her own? Like, I had no concept of what a tax professional actually really was doing.
Yeah.
I thought they were government workers. And sure enough, I fell into this thing. And what it really comes down to is just this unwavering passion to just want to help people, man. Whether it's me giving you a workout program and you feeling something about that, or me helping you save $100,000 on your taxes and you feeling something about that. That feeling, that dopamine high that I get, seeing somebody go through that transformation was what I was craving. It didn't have to be personal training, but it did have to happen in my life. And I'm grateful that it happened with taxes because me being able to save somebody money in my mind gives them infinitely more opportunities than just being able to help them, get a six pack or, look good for one summer vacation. It gives them infinitely more opportunities to create more memories with their family, to keep someone on this earth longer that wasn't meant to be on this earth as long because they got the resources from the efforts that we were able to put in from you doing tax strategy, right? That to me is like the best feeling in the world.
I think what you're getting at is, because I struggled with even starting my community around short-term rentals because I was like burned out on real estate because that's the path that I went. Like, I went all in, right? I went deep and I got burned out. And I resisted starting a community around it because I was like, oh, everybody already knows. There's other people already doing it. I don't need to do it. Why me?
Yeah.
But this fire was burning inside of me. And it really came down to wanting to help people.
Yes.
And like literally everything that we're talking about, short-term rental loophole, like regular people that are working their job that are fucking just can't stand it. They get 2 weeks a year with their family. Like, are you kidding me?
Yeah.
That's not patriotic.
No.
That's not American. I mean, that's what it is now.
Yep.
But like 2 weeks a year with your family, you're capped on your salary. You might get a raise that is less than inflation.
Yeah.
And you can't escape living the same day over and over and over again. And so I'm describing where I was 5 years ago. And I don't want to let that happen to anybody else. And all I want people to know is the short-term rental loophole will set you free.
Yeah.
And that's the beginning. That's just the beginning. And then you can go do whatever you want. Like, you don't need to be an entrepreneur like Karlton. You don't need to go be a content creator, but you get to go be a mom, a dad, a brother, a son, an uncle, like whatever you want to go be. And that, to me, is what I see in you as like true purpose behind what you're doing.
Wow.
Right? It's about making money, of course.
Yeah.
But when you learn that making money gives you more resources to go help more people,
correct.
That's when it changes.
You nailed it on the head. And I tell people this all the time. You think the safe thing to do is to just rely on your one salary that you have. It's actually infinitely more risky to do that because you're planning on one person paying you for the rest of your life. And then simultaneously, you're planning on that person knowing how to beat inflation for you for the rest of your life, to know when it's time for you to cover a medical bill or deal with a life circumstance. They need to be able to support you off of that one stream of income. That's a lot of responsibility that you're giving to one person that also has their own family and their own personal interests, and they utilize employees to be able to bolster their own wealth. That's how entrepreneurship is, right? So I think it's infinitely more important for you to have your own thing, even if your own thing doesn't reap you tons of money. It's just important to have control because we got to see firsthand what COVID did to a lot of employees that just got completely decimated, or a lot of businesses that just aren't operational anymore entirely.
And so for someone that's like the person that I just described, maybe they do want to be an entrepreneur, but they literally have no idea or they don't get how to make money. What can you tell them about making money to give them some confidence to go start?
Being around people who are obsessed with making money or are teaching about ways to make money will rub off on you. And you have to be okay with that. Because if you don't have a lot of money or you're not making a lot of money, the most important thing for you to do is to go attach yourself to somebody that is passionate about making money or knows how to make money. Because what happens is we are byproducts of habits that we've established. And a lot of the habits that I established early on were habits of an athlete, somebody that's going to wake up early, go to the gym, work out. But that doesn't lead always to dollars in my bank account. I could be super passionate and super hardworking. I want to go work harder. But that doesn't always mean that I'm going to go make more money. So simply working hard isn't going to make you money. Your environment is going to help dictate how you make money. And if you don't have an environment where you have people that are talking about money, talking about debt, talking about investments, well, how can you shake up your environment? Karlton, I live in, BF, Idaho. Okay, well, how about you get on to a webinar tonight because you have Wi-Fi and you go get into a community of other people that are on coaching calls, because those are the people that you need to surround yourself with, because your environment doesn't allow for you to be able to go walk outside of your door and just go talk money up the street at the local Starbucks.
Proximity is power.
Absolutely, and always be.
Proximity is extremely powerful because what it does is you get around the energy and things feel different. The way that money flows and the way that people speak, the way they act, the communication, everything is totally different in an environment where there's like building and creating and abundance and helping.
Yes.
Right. And when you're around it, you realize that a lot of people are collaborating.
Yep.
Right. It's not competing. And I think the middle class, especially in corporate, they see it as someone else as a competition. Oh, they're making more than me, or like they're taking my work from me.
Mm-hmm.
When you're out in the real world, especially nowadays with social media and like supporting, and there's just so much money out there. Like everybody's supporting each other. Everybody's collaborating.
Yes.
Right. And then you see how money is actually spent. You see how it's made. You see people ask for it.
Yes.
Right. Because I think one of the biggest, and you tell me if I'm wrong, but like one of the biggest things I see with people in the Midwest, never been an entrepreneur, they don't even know how to ask for something.
It's true.
Right.
Yeah.
And I see people and I have so much love and like, I want the best for people, but they have to be ready to be able to do it.
100%.
Yeah.
And it comes down to leveling up. And when you're leveling up, you have to know that you're going to go into rooms that you feel like you're not supposed to be in. That is what leveling up is supposed to feel like. I went into a room where they're talking about cryptocurrency. I don't know anything about cryptocurrency, but guess what happens? When you go into a room where people are talking above you and everyone in there is leveling up, it's exactly what Kassidy just said. Everyone is collaborating. And when you collaborate, you throw down a ladder. They're going to throw down a ladder for you and bring you up to their level. And guess what? You might slip on that ladder, but the time you show up again, you're going to know how to grab that ladder and you're going to be able to climb higher, and your understanding is going to develop. I still remember when I walked into my very first like cryptocurrency like meetup. I had no idea what a node was and what they were talking about, decentralized, Within 2 to 3 more meetings, I was able to explain back to somebody in a community coaching call exactly the differences between Bitcoin and all these other cryptocurrencies and how you can loan against your crypto or node. And although that has nothing to do with tax strategy here today, it's a perfect example of walking into a room where I had no knowledge because I had the desire to simply level up. So I went in with question marks and I walked out with answers.
How does someone get the desire to level up?
Not everybody is going to have the desire to level up, and you have to be perfectly okay with knowing that there are 2 different types of people in life. There are types of people who have this fiery passion to just want to be better. Those are the people that I really associate myself with, because when I'm around them, it's as easy as talking to them, as talking to my family. Being around them is easy as breathing, drinking water. And then I have this other group of people that I've removed myself away with a while ago. But every time I'm around them, it seems like we're talking about the world is falling apart. We're always depressed. We're focused on the negative. It seems like we're always looking for ways to dig ourselves back into a hole versus ways to dig ourselves out of a hole. And over time, I realize it starts rubbing off on me to the point where my attitudes and my actions start to change. And then now I don't know if I'm doing things that are in the best of my fulfillment within my capabilities, because I'm allowing my circumstances to play a factor into how I feel every single day. And it's because of the people who I've associated myself with. Your environment is so important to how you act and the characteristics that you show up for other people. And so I've spent a lot of time, evaluating who I spend my time with and evaluating that for some of my family members as well when they ask me for ways in which they want to level up.
And so do you have conversations with these people, or do you cut them out? Like, how does that interaction go? Because I think people hear that and they're like, oh, Karlton's an asshole. He doesn't like people. Oh, what? He made a lot of money. Now he's changed and he doesn't have time for us. Like, how do you deal with that?
Well, I look at it like this, right? At any given moment, my life could be over. I'm dying every single day. And when you get radically clear with why you're here and what you feel like you're meant to accomplish, it starts changing how you wish to spend your time. You don't hate on people. You don't dislike people. You just choose to spend your time differently. And because you choose to spend your time differently, other people will first start to judge that. They'll say things like, you don't care anymore. It seems like you're trying to do something that's outside of your operating basis. Why are you trying to do that? But over time, what will happen is people that were meant to be aligned with your goals will start to enter your life. These may be new people. The people that you wished could have risen with you may not be able to rise with you, or they might be able to adopt some of your operating basis that you're starting to have because you're starting to wear off on them. And that's a beautiful thing. It's very beautiful when you can rub off on somebody that you really care about without having to force it, but just by being different yourself. But it's equally as sad sometimes when you realize, well, I want this for the people around me, but I can't force them to see what I'm seeing either, because that's not the way life is set up. Every person needs to see through their own lens. You can't force them to see through yours. So over time, all you can do is live righteously the way you feel like you need to live under God's tutelage.
Have you always believed in God and been religious?
Yes, I have. Absolutely. I was born Christian.
Yeah. Yeah. Because I know that's been a big part of your journey, or at least I know that you talk about it.
Yeah, absolutely.
Yeah.
I'm glad you brought that up, because God, faith, family is at the center of my life, and arguably are the pillars that I base everything that I do off of. When I'm ever worried about what somebody's going to think about me on something that I feel passionately about, I always ask myself, is this in alignment with God, family, faith, and the last one being friendship or fitness? Like, if I'm hitting on those pillars with my content or with my messaging, I know I'm in alignment. And it's typically when I'm not hitting on those pillars that I start to question things. Yeah. So if you're looking for alignment in life, alignment in what you need to share with the world, create a basis to operate off of, like I did. And it worked out really well for me.
Yeah. I think that's an interesting point that you just made, is that when you start to question yourself is really when you're not operating off of your pillars.
Mm-hmm.
Right. And then you need to be able to shift your own energy. And what you were describing about lifting others up, it's a couple things. It's being the lighthouse, right? And so everybody has the opportunity to be a lighthouse, which I think is what people miss. We all need other lighthouses. We all need other leaders and examples and people, but we can all be a lighthouse. And the lighthouse is the stanchion, is the thing that leads us, is the one that points the way.
That's right.
And they're also a thermostat, right? So your energy as a thermostat, you can either heat the room or you can cool the room. That's right. You can heat the world or you can cool the world, right? Your ability to shift your energy into abundance will then permeate throughout your entire world.
Yes.
And so when you decide to become the version of yourself that wants something more for themselves, that's when everything else will actually appear. It's pretty magical.
Yes.
It's pretty magical. Like when you finally decide, it's almost instant sometimes too.
Yeah.
When you make the decision to quit the job, guess what? The next job or the thing that you wanted, you get the phone call. It's pretty magical the way that happens.
It is. So, it's like the world starts bending in your favor the moment you've gotten in alignment and you've already said what is going to happen, whether it has happened or not yet. You've already outlined it mentally.
And so how have you dealt with a lot of the challenges in growth? Because it's been a short period of time, Karlton, right? Mm-hmm. Like, was it 2019 you started your...
Yeah, 2019.
And then you started a YouTube channel.
Yep, 2020.
And you've basically grown, to 11, I don't know if you're above that, $11 million in revenue from like a $20,000 sale.
Yeah. We'll probably do close to 20 million this year.
Yeah. What the hell, dude? Like, that's insane. Yeah. That's like a 6-year span that people dream of. And so who did you have to become from that $20,000 sale to the $20 million Karlton sitting here today?
Yeah, Karlton went from solo YouTuber to I'm a YouTuber with a team of people that help me curate videos to I'm running a course. And now all of a sudden, all these members inside of my course actually want to work with me directly. So now I need to become a firm owner to I need to know how to build systems and process that can allow for people to grow within my firm. And then now I need to be the type of CEO that knows how to build leaders. And over time, it's transitioned from just Karlton to Karlton in a small team to Karlton the YouTuber to Karlton has a small little practice to Karlton has 55 employees now. Everything that has happened is a byproduct of just going all in and saying, you know what? I'm willing to figure it out as I go. I know that these things are happening because of the opportunity that was provided to me from the moment that I decided to say yes to my mom and join her practice, from when I decided to say yes and go get my tax license and make that sacrifice, when I decided to jump on YouTube when no one was talking about tax information during pandemic, and all of this attention and opportunity flowed my way. It was my duty and my obligation to capitalize on it. I could have got comfortable. I could have said, you know what, this YouTube income is great. Let's just stay and focused on YouTube. But I listened to what people were telling me. Karlton, why don't you have a high ticket offer? Why don't you start a practice? Why don't you build something like this that can serve us? You know, your mom has this firm, but why don't you have something that gives us the real estate, gives us all of this? And when you start serving people and you start solving bigger and bigger problems, you start getting rewarded in bigger and bigger lump sums. To be completely honest, the only reason why I grew so fast is because I just committed to solving bigger problems faster. I didn't get comfortable solving basic problems. I said, okay, I already solved these basic problems. Let me go figure out the bigger problems to solve. And then I became obsessed with solving bigger problems, which almost sounds crazy, but now I'm constantly just looking for problems to solve. And these are the things that have turned around and benefited my company and benefited my growth.
How do you know that something's going to be a big problem to solve? How can you measure, is this a big enough problem for me to solve?
When I don't have all the resources myself to solve it. That's how I know it's a big enough problem for me to solve. When it's outside of my normal skill set. You know, a problem for me early on was, how do I go from $500,000 to $1 million? That's well within my skill set because I knew how to get to $500,000. I should know how to just double that, right? Okay, well then how do I go from $1 million to $10 million? Okay, more leads, more videos, more clients booking calls. Okay, well, how do you go from a $10 million company to a $100 million company? Well, geez, it's not just about selling more people and just hiring more people. It's not. It's so many more layers to this. And to be completely honest with you, wouldn't it make more sense for me to just go talk to somebody that's done that before? Go put myself in that environment? And so rather than just saying, oh, I have all the same skills needed in order to just continue to grow, that's crazy thinking. It's more important for me to say, why don't I go and find somebody who has already done the thing and then tell me all of the different obstacles that you had on the way to getting to the thing, the 100 million. So that way I could just skip over all your problems way faster and get there in the fastest line as humanly possible. That has always been my passion, which is finding people who have already done the thing. My mother was already successful in tax and accounting. She was already running a business that was a multi-million-dollar business. Okay, cool. I get how you do the thing. Now I know how I can go do my thing. But what if I want to do bigger than my mom's company, right? I want to double the revenue she's doing, triple the revenue she's doing. I need to go find somebody who has done something like this and start focusing on that thing. And typically it leads to more problems that I don't have the solutions to. Right now, that being AI. I wasn't the biggest wizard on AI 6 months ago. Now we have an AI associate that's working inside of our company, building out systems for AI. So I'm constantly looking for things that I might not be the best in and building up systems or finding the right people to solve that problem.
That's right. I wouldn't be here if I didn't do exactly what you just said, right? I found Dan Martell first before he was Dan Martell, but I could see it. I was like, this guy's the real deal.
Yes.
And then Rich, our mutual friend Rich, and he opened up. The fact that he opened up a community, that's the other thing for people that are like, I don't know how to help people or I don't want to help people like I was. I wouldn't be here if it weren't for people deciding to go help others.
Yes.
Right. I wouldn't be doing the thing that I love right now if Dan didn't exist, if Rich didn't exist, if you weren't sitting here like helping people. Like, you need to know that you have the ability to be a lighthouse and help people, but you also need to go find the greats and you need to spend the money.
Yes.
Right. Because what you just described was, and I don't know who you're talking to go build a $100 million company, but I'm sure it's not cheap to go talk to them.
No.
But it's gonna save you 10 years, right?
Yeah.
It's gonna save you 10 years by spending, I don't know, 6-7 figures on whatever that conversation costs, right?
Yeah, absolutely.
Yeah.
It's a 6-figure conversation. I already paid it. And then those are the types of conversations I'm looking to pay for, because for me, I'm paying to solve problems faster than other people. If I have the resources to go and make an investment to join a mastermind or a club to get access to people that have solved $100 million problems, and I'm a $10 or $20 million business, why wouldn't I do that? Why wouldn't I go and drop 6 or a couple of 6 figures into something that can easily help me exponentially grow to 100 million 5-7 years faster? It's all about time value of money. And when you get to this point in the game, what I'm doing is I'm paying for information so I can make decisions faster and grow faster and know where the mistakes are. It's like this. I can see about 5 miles down the road based off of my own understanding. But then you have people that have been on this earth longer who have done more than you that can easily see 10, 15, 25 miles down the road. So if you're capsized and only being able to see 5 miles down the road because you've only done $1 million, you only done $10 million, or better yet, you only done $20 million, you think you know something. You think you know because you started out seeing 1 mile. Now you see 2 miles. Now you see 5 miles. You think you're a badass because you can see 5 miles down the road. You're looking back at all those people that are barely getting a 1/4 mile vision. And you're like, dude, wait till you can see 5 miles. This is the most dangerous place to be in, Kassidy, is where you think you can see things and you think you know everything. I never want to be the smartest person in the room. And that was something that was taught to me by my mom, because that's how you know that you're a big fish in a very small pond. I want to be a small fish in a big pond, and I want to constantly be looking to grow. And being able to surround myself with people who think bigger than me remind me of why I got into this business in the first place, why I'm so passionate, but more importantly, they give me the skills that I'm looking for to help me prevent the mistakes that are inevitably going to come as a part of growing. That's why they call it growing pains.
All right. Well, I don't know where to finish from here because that was so good, Karlton. That was so good. That was so good.
You got me ripping today.
What is the next thing that the people listening should go do, be, have in their life to go create something for themselves and be patriotic?
Well, stop paying the lazy tax. I call the lazy tax the tax that you pay for inaction, the tax that you pay for failure to go outside of your operating basis to go educate yourself. We view in the tax and accounting space as the CPA as the golden standard for everything tax. The person that files my return, saves me money on taxes, handles anything with the IRS. But when you get into the game of trying to really build real sustainable wealth, you realize that there are certain professionals that are really good at just filing your tax return. Matter of fact, that's actually what they went to school to do, just file your tax return. And they're truly tax professionals, just like there are surgeons that specifically only work on specific things. And in the tax strategy realm, you have tax specialists that will spend and dedicate years of their life to figure out ways to help you structure your investments, structure your money so you don't have to pay taxes at all. So that when you go into a CPA's office, all you're doing is what the CPA is supposed to do. Collect your tax returns or your documents and submit a copy of your return. But not every person is going to hire a tax strategist. But where you can start is getting yourself educated on the tax system. Because at the end of the day, every single person is going to pay taxes as their single lifelong expense. So if you can start wising up right today and getting yourself educated on some of the incentives that the government has placed in the tax code for you, you can start preparing for when the time is right to be able to jump into those incentives, whether it's now or later, to set you and your family up for success. And that's my goal for everybody.
That's right. And I think the sooner that you get educated, the sooner you'll actually see that you have opportunities that you didn't even know were available to you.
That's
right.
it.
My whole purpose, my whole goal is to get people out of just living the same day on repeat in their mundane's not even the right word, but like, I want people to live their best lives. And it's crazy to think that not paying taxes is actually one of the best ways that they could go do that. But like you said, not paying taxes is one of the most patriotic, like family focused things that you can do.
Yes.
Get educated, go talk to Karlton. If not Karlton, go get the best CPA that you can, because the sooner that you pay less taxes, the sooner that you'll become free.
Absolutely.
So Karlton, where can they get a hold of you? Where do you want to send them?
Yeah, you guys can go to our website, taxalchemy.com, to get more help on tax strategy. Feel free to visit our YouTube channel at Karlton Dennis. Our YouTube channel puts out a ton of free information. We post videos every single week. And if you're somebody that's ready to take that next step, be sure to DM us a message on Instagram. We'd be more than happy to put together a free tax analysis.
Karlton, thank you so much, dude.
Thanks for having me on.
Yep.